Hey traders, welcome back to my channel. In today's video, I'm going over market gaps, obviously. So we're going to look at what are they, how they're filled, that sort of thing, if I trade them. If you have any questions, let me know in the comment section. And then, as always, I'm going to link anything relevant in the description bar. If you have not subscribed already, please do. I try to upload as much as possible, which recently is not as often as I'd like it to be, but I also have a free course story that I wanted to mention. So I'm going to put that down in the description bar before I forget, and I'm going off on my tangent. Should be posting once a week going forward. That's my goal. I'd love to do more than that, but right now that's looking like what's going to happen. So you can also find me on Instagram and TikTok. I post there much more often. So guys, I'm just going to get into what market gaps are. So essentially a gap is a gap that occurs on a bar chart. And it's going to look something like this. And don't mind my messy drawing, but let's say this is the end of the weekend, okay? Or sorry, this would be before the weekend. And then we have the weekend coming up, and all of a sudden, the next candle that forms, I think I said bar chart, and I obviously meant candle chart. The next candle that forms, there's going to be a gap, okay, between these two candles. I'm going to show you what it looks like on an actual chart, but that's the gist of it. And this normally occurs in Forex, at least, because of like after the weekend. That's where you'll usually see it. On a stock chart, like if you're a day trader, if you trade stocks, you'll see this a lot more often because it can also happen with like major news release on like the really, really low time frames. We'll get into that a little bit more, but that is the gist of it. And let me clear our screen. Okay. So this is what it looks like on an actual chart. I believe this was the British rank yen, I think. Either that or gold. So this is what it would look like, on a normal chart. It actually looks like it just, it's space, right? Sorry, that's a little hard to see. I'm going to make my blue a little bit. Let's go red today. So this right here. This happened after a weekend, but like I said, if there's like major news release and you're on the really lower time frame, then you could possibly see it on the 1 minute chart. It's just really, really not likely. So something to note about gaps, and this is very well accepted, I guess, in the technical analysis space. I won't even say Forex because, like I said, this really does apply to stocks and indices and metals, pretty much anything, right? Anything to do with technical analysis. So these gaps will often be filled, okay? And what that means is if the gap occurs and we get a big push to the downside, it's very likely that price is going to come back up and retest this level, okay? Just like it did perfectly here. And this is pretty complex stuff. So, and the reason I say that is sometimes this movement will occur kind of away from the current trend or away from, more relevant structure, I guess I'll say. So I don't recommend new traders or even intermediate level traders try this out. You do need to have a really, really strong grasp on other technical analysis and fundamental analysis. Guys, I don't know why I'm having a hard time getting words out today. I think I need more coffee, but that's essentially what it looks like, okay? And going into trading gaps. So first of all, again, like if you're someone who does not like a lot of risk, if you're a new trader, I don't recommend this. Just because oftentimes you are going against other more relevant, indicators and structure. So it's more high risk form of trading. Okay. So if you are going to trade like this, use really low risk. This is not something that I will often trade unless it's textbook like this. And I'll show you what I mean by that. So we're going to look at what's called the fill zone. And the fill zone, sorry, I just need to move my mic so I can draw on this a little bit better. So the fill zone is this kind of area. Oops. This area right here. Sorry, I know that's not good drawing, but the reason I call this a fill zone is just because it's at a zone, right, that we're going to eventually fill. Very, very likely that will eventually fill, and it doesn't always happen again. So once you have that zone drawn in, the next really important thing to note is that it needs to occur at or near structure. So if this is not occurring at like a support or resistance, and in this case it was. In this case, it was occurring at a support. So this zone here had been previously tested as support, okay? If this had not previously been tested as structure, so either support or resistance, we would not use this at all, okay? It's just very likely that it might not get filled, other fundamentals will come into play and kind of push it in the opposite direction. So it doesn't always get filled. So you definitely need that confirmation of it being at a zone, so or structure, sorry, I should say, because not everyone here uses zones. Volatility. Okay, so this is something, be mindful of volume. So yes, we want high volume when we're entering a position. I think that's pretty evident. Like we need price to be moving so we can get in on these moves. However, you do want to be careful. Like if you see what I like to call like an unhealthy trend. Okay, and an unhealthy trend is a trend that occurs where, instead of having lower lows and then lower highs and then lower lows, you get more of this steep, okay, trend like this. Hopefully you guys can see that. I know it's really, I wish I could get white, but for some reason it's not letting me. So it would look more, I'm going to put it on the black now so you can really see it. It would look more like this. So very steep. And it's not a healthy trend when a trend occurs like that. So it's something that I would steer away from, especially if we have a gap in the market, because any added volatility like that and any unhealthy trend we see after this gap is likely indicating that fundamentals are pushing price in the opposite direction. And we're not always going to see a pullback when we have an unhealthy trend. Okay. So pullbacks and unhealthy trends don't go hand in hand. That's what you should remember there. And then momentum. So obviously we do need momentum, pushing up towards, and this just kind of goes hand in hand with what I just said. So we don't want too much volatility to the point where it's giving us an unhealthy trend, but we need enough momentum coming away from this zone once we see rejection to actually enter the trade. And this is pretty much textbook in line with what I always say. So there's nothing new here. It's just you're treating this area as a zone. You need to see rejection and then a strong push away from that area. And that's really it, guys. There's nothing more to it than that. The biggest thing to remember is that this zone won't always get filled. So if there's no other relevant structure, it's just not worth even looking at a trade in that area. Okay, and then after the gap. So this is the last thing I wanted to talk about. I know this is a quick video, so we'll keep it pretty short here. But after the gap occurs, there are 3 things that you should really look at doing. And not in any particular order, but you do want to redetermine structure. So this goes back to what I said, ensuring that, you're either at or near a zone. And you want to determine too. So if the gap occurs here, okay, and let's just say we go down like this. So if the gap obviously is occurring right here where the circle is, we need to know, okay, what structure is at this gap, if any, right? We also need to know, where is price now? What type of structure is it at? Is it at a resistance right now? Or is it just kind of hanging in the middle of 2 levels? Is it, has it broken another zone and kind of moved on to the next area? You really want to keep in mind, you always want to be analyzing structure. So as a trader, that's something you should always be doing. Monitoring what zone you're in, what zone's coming up, what zone's above price or below price, and that sort of thing. So that's just something you should be doing anyway. Checking news. I'm going to change the color of this again. I'm not getting very good payoff on the side there. I'll pick a different background next time. Checking news. So you do want to check news as well. Make sure that, oh, that one works. Make sure that your gap didn't occur because of huge news. Like if you were to see a gap randomly occur, make sure that, there wasn't some major fundamental event that's going to keep pushing price in that direction. So price, like I mentioned, is not going to get filled. Oh, this color's so much better. Okay. It's not going to get filled. It's going to keep on going down if there was news causing it to go down. It's not going to magically come back up to that gap. That gap is only filled because of self-fulfilling prophecy, but fundamentals will outweigh that self-fulfilling prophecy. So just keep that in mind. And then remove pending orders. So if you have a pending order, and I see this happen a lot, honestly, and let me just get rid of this because it's looking pretty ugly. So if you have a pending order, and let's say it was, I'll do another example. So let's say this is price. We see a gap, opens again, and we're up here. And you had a pending order to like sell at this support, right? Let's say that this is a support zone, we'll say. You get a gap like this occur, it's very unlikely that this order is going to get filled, because obviously there's a reason we're pushing in the other direction and at such a speed that it caused a gap, right? But also, it's just, these really aren't conditions that you want to be relying on pending orders. You really want to be monitoring what price is actively doing. And I say that for any volatile pair anyway. Like if I'm trading gold or US 30, I try not to place as many pending orders on them. So just keep that in mind as well, that pending orders don't do well when a gap occurs. Obviously, if the gap occurred, and kind of, actually, this is a really good example too, and I'm going to touch on this really quick before I head off. But if, let's say this occurred, same sort of thing. So like this, and yeah, we have a gap, and you had set like a buy, let's say right here, okay? Because there was previous structure that led you to believe that, you'd have a buy up here. I still wouldn't keep a pending order after a gap unless it got filled. Obviously, that is just shitty, shitty luck if it did. And you can't really help that all of the time. But if this is not filled, I would remove it. And the reason being, we could see this gap being filled, and then this is never going to hit your target because price is going right back in the other direction to fill that gap. So again, really not the best for beginners, but this is kind of the most basic level of it all. So I think we've covered the most of it. So if you guys have any questions on gaps, please do let me know. Again, it's not something I trade that often. I just wanted to go into a little bit more detail on them because there's not a whole lot of info out there on gaps. And yeah, I'll leave my free course below. I think that's all I had to say. Next video, I think, is going to be on the new Funding Talent Challenge. So I'll keep you guys updated on that. And I'll see you guys in the next video.